Investing in stocks. How to start. Investing can seem like a daunting maze of charts and numbers, but fear not. We're here to simplify it all for you. In this video, we'll break down the stock market and help you make sense of it all. Whether you're looking to expand your business or dream of soaring through the skies in a private jet, we've got your back. So buckle up and get ready to navigate the exciting world of investing. Let's dive in and make those dreams a reality. Where do you acquire your money? Here's an idea. Divide up your company and sell a portion of it while keeping the majority to retain control. That is the purpose of the stock market, and the process is known as the initial public offering, IPO. But how much money can you expect to make? Consider immersing yourself in the exciting narrative of Mark Zuckerberg's brainchild, none other than the social media behemoth, Facebook. Consider this. In 2012, Facebook seized center stage by going public with an initial issue of 337 million shares at a low price of $38 apiece. Isn't it intriguing? This is when the plot deepens. Mark Zuckerberg, the mastermind, had a revelation, seeing that there were hordes of people vying for a piece of his digital kingdom. Undaunted by the already amazing share count, he decided to boost the ante by purchasing an additional 84 million shares, bringing the total to a mind-boggling 421 million. The result? A financial show that enthralled the entire world. Hold on to your seats because things are about to get much more exciting. Every single one of those 421 million shares found enthusiastic buyers. What happened next? A whopping $16 billion has been poured into the Zuckerberg empire's coffers. That's not just good. It's the stuff of financial tales. Join us as we uncover stories of success and shrewd maneuvers in the ever-changing world of high-stakes finance. Mark Zuckerberg flew into the exclusive billionaire club at rapid speed, accomplishing this astounding feat in a matter of hours. The financial roller coaster began with a bang, with Facebook's stock price skyrocketing to a breathtaking $45 on the first day of trade, an ascension that appeared nothing short of meteoric. The air was charged with the prospect of unparalleled success, and Zuckerberg, the tech wunderkind, was riding the tide of triumph. However, before the champagne corks could be popped and the party could begin, the plot took an unexpected turn. The stock price retraced its steps like a fading dream, falling back to the initial offering price of $38 by the end of the day. The knowledge that the journey had only just begun dampened the initial rush's joy. But hold your breath, for the story is far from over. Unbeknownst to Zuckerberg and his legions of investors, this setback was only the first note in a symphony of difficulties. The initial stock price fluctuation turned out to be a mere prelude to a series of trials and tribulations that would put Facebook and its visionary leader to the test. The terrible news was about to be revealed with fury in this drama of highs and lows, where each plot twist added layers of complexity. The setting was set for an engrossing story of resilience, strategy, and the unwavering pursuit of success against the backdrop of the volatile world of financial markets. Prepare to be on the edge of your seat as we navigate through the various chapters of Facebook's journey. Are you ready to take control of your financial future? Don't miss out on the opportunity to learn more about investing and how it can help you achieve your dreams. Hit that subscribe button and join our community of savvy investors today. Together, we'll unlock the secrets to financial success. Let's do this. The drama has only just begun, and the stakes have never been higher. After a few weeks, the plot takes an unexpected turn. Facebook's once mighty price has plunged to a disheartening low of $20. That's true. A stunning fall. A mere shadow of its previous self. A value now reduced to a fraction of its former self. It's a financial earthquake, threatening the very foundations of the social media titan's original optimism. To understand this strange turn of events, let's look at the stock market itself. Stocks were not merely speculative investments in the past. They were actual portions of a corporation purchased with the promise of dividends. Consider this. When you bought a stock, you weren't just conducting a financial transaction. You were claiming a stake in the company. It was a partnership, a symbiotic relationship in which the company's success mirrored the prosperity of its stockholders. However, the stark reality confronting Facebook deviated dramatically from this typical story. The stock market, long a place where ownership meant a part in a company's success, was now presenting a perplexing picture. Facebook's equities, which had reached dizzying heights and then plummeted, were defying investor convention. The value rollercoaster became a representation of the complexities of modern finance, where the rules seem to be changed on the fly. As we traverse this maze of financial instability, the drama of Facebook's shares takes center stage, calling into question the entire idea of ownership and value in a market that is both unpredictable and cruel. Buckle up as we continue this engrossing story, exploring the unknown stock market territory and the compelling journey of a corporation that refuses to be defined solely by its stock price. Prepare for a paradigm leap in your financial path. Consider this. You, like every other proud owner, own the golden ticket, the chance to share in the legendary Facebook's revenues. So, indulge in the illusion for a bit. Congratulations are in order because, as of January 2022, you bravely seized the opportunity to purchase 10 Facebook stocks. Consider the following scenario. You, the owner, are now standing shoulder to shoulder with the likes of Mark Zuckerberg, and this is not a joke. As the fiscal year progresses, your company, the powerful Facebook, performs a financial symphony, bringing in a whopping $15.934 billion. Now let's take a break and look at the reality of your ownership. That's right, as the proud owner of 10 Facebook shares, you're entitled to a piece of this massive profit. The excitement is great. Your story as a stakeholder is about to be revealed. But wait a minute. You paid $1,300 to join this elite club by purchasing those 10 stocks at the January 2022 Facebook stock price. Fasten your seatbelts as we sail over the sea of stocks. Prepare yourselves for this shocking revelation. There are nearly 3 billion Facebook shares in circulation, or 2.956 billion to be exact. The magnitude of this figure may cast a pall over your tiny 10 stocks, but don't give up hope just yet. Allow optimism to be our guide. Your 10 stocks may appear to be a drop in the ocean in the broad tapestry of Facebook's financial narrative, but remember that even the mightiest seas are made up of innumerable drops. As we navigate the rivers of ownership and financial fortune, your hopeful outlook may well lead to the discovery of unexpected jewels in this huge sea of stocks. So, with a positive attitude, let us trace the trajectory of your ownership adventure, uncovering the treasures hidden within the delicate folds of Facebook's financial success. Because if we divide net income by the number of shares, each stock should earn slightly more than $15.9934 billion, 2.99956 billion, which is known as EPS earnings per share. In other words, your 10 shares are expected to earn you around $54. Not terrible, is it? But that is only hypothetical. In practice, you get nothing. The board of directors will be the ones to determine what to do with this money. And because their primary aim is to line their wallets and build the company, no one cares about your 10 stocks. Don't worry, not everyone is a con artist like Mark Zuckerberg. For example, Apple paid $13 billion in dividends last year, or $2.5 per share. Of course, it's not much for a $170 stock, but something is always better than nothing. However, it no longer matters how much the corporation pays, as much as the stock price. Within a single year, Apple investors saw a 33% increase. That is far better than the market average. You've surely heard that Apple is the first firm to achieve a $1 trillion valuation, because its stock price has surpassed $200. But what if we told you that Apple's stock price was $645 until June 2014? Does this imply that the corporation is already worth more than $3 trillion? Oh my goodness, the stock market is so difficult. Allow us to clarify. Stock splits are a type of stock split. Each stock was divided into 7 parts, and the prices were reduced accordingly. Technically, nothing has changed, but more people can now afford the shares and join the Apple investment community, because the stock is now worth $92. However, not all businesses do this. Some, such as Warren Buffett, want to work only with serious people. Berkshire Hathaway, his corporation, has never split its stock. As a result, it only has 1.68 million shares, whereas Apple has 5.91 billion. That is why a single Buffett's stock, Berkshire Hathaway, costs more than $300,000. But don't worry, Buffett would be happy to take your money as well. That's why he created Class B shares, which are only $200. The world of the stock market is vast and ever evolving. But alas, this video must come to an end. Don't forget to hit that subscribe button and ring the bell icon to stay updated with our latest content. Thanks for watching, and we'll catch you in the next one.